I'm Donald Leggett. Welcome to the latest London South East CEO interview. I'm joined today by Gati Al-Jebouri, Chairman and CEO at Pembridge Resources, ticker PER, that's P-E-R-E, and they've an 11% non-operating stake in the Minto copper mine in Canada. And they've just announced a new focus on the decarbonisation of the renewables market. Welcome, Gati. I'm delighted to welcome you to London South East. This is the first time on LSE, is it, for you?
Thank you very much, Donald. Indeed, it is the first time, the first of many to come, I hope.
I certainly hope to see you again. That's absolutely right. For those of us new to Pembridge Resources, tell us a little bit more about the business and where it came from.
So a few people got together, put some money in 2017 into what was then a cash shell. And together with our board of directors, one of our non-executive directors, Guy Lebel, discovered a project called Minto Explorations at the time, owned by Capstone. By 2019, June of 2019, we had reached agreement and purchased Minto Explorations from Capstone, and subsequently brought Minto into production by October 2019. I was a non-executive director during most of that time, and took over as CEO and chairman in October 2019 from the previous management, who went on to do other things.
And Minto is a copper mine in Canada, right?
Minto is a producing copper mine in the Yukon in British Columbia. It's close to the border between Alaska and Canada. It's where the original gold rush started. And some of you will have seen the Charlie Chaplin movie. It was filmed on a river right next to our mine.
Ah, yes, the Yukon. The Yukon is famous, yes. And today you put out an RNS today, a regulatory announcement. What were the nuts and bolts of that? Why the announcement? Why now? And what's different about that announcement today?
So we have a very strong asset in Pembridge's balance sheet, which is the Minto investment. It is supporting our financial position and our future prospects for developing and growing the business. What's really important for me today is to safeguard that value and to grow it going forward. And the announcement today is to talk about the fact that we're not going to be looking solely at copper projects and mining, but we're going to be looking at projects that are in the energy transition, in the decarbonization of the energy sector. Copper is part of that. We cannot have energy transition and we can't have decarbonization without significant copper being supplied to that sector. So we're not walking away from copper, we're staying in the copper market. And if the right opportunity comes along, we will make investments in copper mining again. But I really want to start looking at renewable energy. And an example of that is solar. Why? Because I've read some studies and I've seen evidence that over the next 8 years, we're going to see dramatic growth in solar, anything as much as up to 10 times the current solar power production will be from solar. And by 2050, we could have even a greater growth, up to 100 times. So I see a lot of opportunities in the energy transition and the decarbonization sector. And because I want to grow Pembridge, because I want to grow and make our investments in growth markets, renewable energy is a sector that we will be looking at very, very carefully going forward.
Okay, in terms of assets, in terms of solar assets, decarbonization assets, do you have any purchase in mind? What sort of stage are you at?
So what we've announced today is absolutely clear that we want to safeguard value, which means we will not just invest in any asset that comes along. And our criteria are clear. We will have IRR of 12% or higher on any new investments. We will take a minimum 10% stake in the investments. And we prefer projects with an NPV at an 8% discount of above $30 million. If we're looking at copper projects, then we're looking at minimum of 10 million pounds per annum production and minimum of 7 years life of mine remaining, and an all-in sustaining cost of below $2.65 per pound. If we're looking at gold, and I do appreciate that that doesn't necessarily directly fit in with the energy transition, but if those assets come along on an opportunistic basis, then we're looking at a minimum of 10,000 ounces annual production, again 7 years life minimum, and all-in sustaining costs of $800 per ounce. Those criteria, those economic criteria, are exactly the same we will be applying to our energy transition opportunities. We're looking at solar park investment opportunities as we speak that for sure must meet the economic criteria that I mentioned. But most important, for any investment project we look at, these will be projects that are already generating revenue or close to generating revenue. So we're not looking at exploration or early stage development projects.
Are you in talks with anybody?
I'm sorry?
Are you in talks with anybody?
We are talking to lots of different potential partners. Nothing that I can disclose here today as definitive or to be realized in the near term. But yes, we're not sitting just developing a strategy. We're actively looking for new projects.
And talk me through the fundamentals of the Minto copper mine in Canada. You say it's in production. Are you in receipt of revenues, therefore?
So, as I mentioned, we restarted the mine in October 2019. We survived the pandemic and the very difficult 2020, and we're happy that we're now benefiting from the growth in the copper sector that we're seeing. We undertook and presented a new 43-101 preliminary economic assessment report prepared by JDS, which showed a lengthening of the life of mine to 8 years up to 2028 and 24 million metric tons of ore resources. We're planning to develop and produce roughly half of that during the remaining life of mine. What's more important is we managed to list on the TSXV the Minto company in November of last year and raised 31 million Canadian dollars. So that stabilized financially Minto as well as the production growth that we're seeing. And in November and December of last year, we were processing on average 3,000 metric tons of ore. Our forecast for this year is between 28 and 31 million pounds of copper to be produced, which is an increase on 2021, and believe in the growth that we can see from extending the life of mine through exploration work that's going to be done.
Okay, and has Minto been good for your balance sheet? Could you talk me through your balance sheet this year and in comparison to the previous year?
So this year we will report to our shareholders a positive equity for Pembridge. In the past we've had negative equity for a variety of reasons, but on the basis of unaudited balance sheet figures that we have, which our auditors will confirm, I believe, in due course, we now have close to $10.9 million positive equity. If we look at that on a fully diluted share capital of 130 million shares, that's the equivalent of 7.8 pence per share. Fully diluted, it means our convertible loan that we have, $3 million, which we issued last year to be able to invest and participate in the Minto capital raise. If that's converted, then it's 130 million shares. If that is not converted, then our equity will be 10.9, as I already mentioned, and then our capital will be the equivalent of 10.5 pence per share, if there's no conversion of the convertible loan. In all cases, we're at a discount. We're trading today at a discount to those numbers of at least 30%. So that shows significant upside, an opportunity that investors today and new investors can have by investing in Pembridge.
Can you give us an estimate of the revenues that you would expect to get from Minto in the coming year?
You know, it depends on what price we're going to achieve. But if we're looking at 28 million pounds of copper at the current price of $4.40, we're talking in excess of $120 million. And at the current copper prices, we are going to be profitable, and we are profitable. And we will be looking at investing some of those revenues into the exploration program that Minto has announced, that we will be increasing the life of mine
how much of that comes back to Pembridge?
The actual cash flow into Pembridge from Minto depends on the dividend policy of Minto. That has not been set yet, but this year I strongly believe that the revenues that we generate in Minto will be used into exploration and into lengthening the life of mine significantly after 2028. Thereafter, in the future years, I'm sure that Minto will announce a dividend policy and we will be receiving revenues. In the life of mine, I see that Pembridge can receive anything between 17 and 30 million US dollars. That's our share of the Minto cash flows, and we will receive part of that in dividends.
Okay, so what news flow can we expect from Pembridge Resources in the coming months then?
Well, several. I would divide them really into two. I would divide them Minto related and solely Pembridge related. Minto related, we will talk about progress on operations. That is the daily production that we will be achieving during 2022. That is optimizing our cost base through operational improvements. We'll be talking about the financial results, obviously quarterly announcements, and we will be talking about when the exploration results are ready, what the results of our exploration program have been. With respect to Pembridge, I would say I would be very disappointed if we do not have at least one acquisition investment in Pembridge this year.
Fantastic. We look forward to that. Is that one of the reasons investors should hold Pembridge stock? What's your investment summary? This is my final question here. Last question. Pile in all the bits that you think you may not have mentioned.
I just divided the news flow between Minto and solely Pembridge. I would again divide the answer into Minto and Pembridge. If anybody believes in copper, and I am a strong believer in the future of copper, a price which will be stable around current levels, some people are much more optimistic and see even higher prices. You can invest in Minto shares, but I recommend you invest in Pembridge shares because you're getting Minto at an even higher discount than the discounted share price of Minto today. So first reason is buy Pembridge because you're buying into Minto at a discounted rate than even buying Minto shares. The second reason, Pembridge is not going to sit around waiting for cash flows from Minto and not grow. We are going to grow. I've set out in our strategy how we're going to grow, the types of projects that we're looking at. I strongly believe we will have new projects this year and next year. So we're a growth company in a growth sector, which is the energy transition sector. So investors can benefit from investing in Pembridge and benefiting from those kinds of projects that possibly they wouldn't be able to invest in directly themselves.
Gati Al-Jebouri, CEO at Pembridge Resources, thank you so much for joining us today. We're out of time, so sorry about that. With many, many thanks to you for joining us from Dubai today. For more interviews like this one, please subscribe to London South East YouTube channel. So that's Google London South East YouTube and then hit the subscribe button. You can follow what's happening with Pembridge Resources on our chat board. So just look out for PERE, on our chat pages and on our Twitter feed. Thanks again for watching this interview, and as always, do stay safe.